Hey there, social media world. It's Mr. Green here. Just doing a quick lesson on short selling. Some of you already know what it is. Some of you don't know what it is. Some of you have heard of it, but you're unsure. So let's clarify it. What's most important to clarify is it's not something that you need to be aware of or just certain of. If you're going to trade or invest, you need to know how to apply it. And I'm going to show you why once we go to a chart. All right. So real quickly, we're just going to go to the S&P 500 because anybody that knows anything about trading and investing knows that the S&P 500 is always going to be the global, not just the U.S., but the global benchmark for the equities market. And then obviously the other market that we like to track closely is the dollar index, because that's always going to give us a quick read on upcoming trends. But let's just look at the S&P. So we're going to look at the futures index, the S&P 500. Brief overview of the S&P. If you don't know what it is, the S&P 500 is the Standard & Poor's benchmark of the 500, best performing stocks. If they don't perform, they boot them out. If they do well, they keep them in. Basically, long story short, the S&P is designed that if it goes up, most of your stocks are going to go up. Sometimes the situation dictates different sectors, etc., but you guys get the point. If it goes down, your equities are going down. So let's just look at a macro view. Let's look at a long-term view of the S&P 500, because here's the issue. Most people only know how to make money in the markets when the markets go up. And that's a no-go. All right? Because they get caught up in the terminology where they're, financial planners or their friends or the people on TV tell them, "Hey, don't worry. It's gonna go back up. Don't worry. It's just going down for a little while. It's gonna turn back around. You'll be okay." And they're right. They're not right about you being okay. They are right that it's gonna turn around, because that's how the stock market's designed. The market's designed to fluctuate and go up and then go down. But what I want you to understand is something called time value of money, and this is what most investors don't understand. Time value of money is just a simple financial equation that's going to give you how much money you make over how long of a duration. Then you got to include, what was inflation, taxes, etc., right? Basically your return. Now, whether you want to make that a percentage or off whatever your total account is, whatever it is, no big deal. Okay, we're at the chart now that I want you to look at. Now, look, if you don't know how to read a chart, that's a whole nother lesson for a whole nother time. But you don't have to be a rocket scientist to understand how to read this. Right now, look, just simply follow what I'm doing. I'm looking at a monthly chart. So each one of these candlesticks represents 1 month of price action. So I'm going a little bit back in history here. I'm going back to the 2000 crash and the 2008 crash, okay? And then obviously we just had the 2023 crash. Quick little info for you. In the history of the markets, there's been 15 crashes. 15! All right? The average crash cycle going down is about 18 to 24 months. The average time for it to recover is about double that time. So what does that tell you? That means money travels faster going down than it does going up. You can see this. You can see in 2000 right here where the dot-com boom happened. You can see, just follow my cursor on the screen. You can see how fast price fell and how long it took to recover. The same in the real estate mess in 08, okay? It took that long to recover. I'm just giving you data for the last 100 years with about 15 crashes. Now, the other thing that you want to look at is the average loss per an investor, just average, was anywhere between 40 and 60%. Okay, some people maybe have lost less, some people may have lost more. Just giving you numbers, okay? That's all. Now, what if you could have, though? What if you could have potentially made money, or at least protected your money during those crashes? Because I want you to start looking at something. Because yes, it did turn around, but I want you just to look at this, and hopefully this resonates with some of you. All right, some of you are just hard-headed and you're just going to shun it out anyways. But that's regardless. But look at from the time from 2000 all the way to 2014, the market only retreated back to its previous highs. That means the market broke even for 14 years. That's a long-term investment, okay? So what I want you to ask yourself is this: would you work for free for 14 years? The answer is no, okay? Don't tell me, oh, Mr. Green, it's passive income. It's going to come back around. Sure, 14 years is pretty passive for you not to be making a return on investment. Now, with that being said, I'm going to start to wrap this up. This is just a quick, short session. With that being said, most people don't have the money they need to retire when they get to the ages of 60 or 65 because they only had one stream of income and they start relying on their 401ks or their IRAs or their brokerage accounts. And then they get there and they don't have what they thought they were going to have. And that is because you weren't earning a consistent stream of revenue if you weren't capitalizing in a down market. Hope that makes sense. Basically, what I'm saying is this: the market travels up, it travels down, and it travels sideways. There's something called a sum zero game, where that means for every transaction, there's a buyer and there's a seller. That creates a balance. If there's a buyer, there's a seller. If there's a seller, there's a buyer. Tongue twister. There's also, in most cases, there's going to be a winner and a loser. So if there's most cases, there's someone winning, someone losing, someone winning, market's going up, market's going down. What does that tell you? That tells you there's no such thing as a bad market. Get the media crap out of your head. Get, the people that are friends that are saying, oh, the market's doing bad. No, maybe you had a bad day. Maybe I had a bad day. Maybe you had a good day. Maybe I had a good day. There's no such thing as a good or a bad market. There's an up market where we go long and we buy. There's a down market where we short and we go sell. But see, here's the issue. Most people don't know how to do it, and they've heard of it. And in let's be honest, trading and investing is much more mainstream than when I started, okay? I started over about 10 years ago. Much, much more mainstream. But at this point right now, people are starting to understand about short selling, but not how to execute it. It is extremely, extremely simple to execute, okay? Your brokerage does a majority of the work for you, all right? All you got to do is click a sell button, all right? All you got to do is click a sell button on your brokerage platform, and instead of trying to make money when it's going up, it's going to make money when it's going down. Now, at the beginning, as I said to you, this is a must. This is not something that you can maybe add into your repertoire or, decide to do it. If you want to earn consistent money in the market, I don't care if trading is a, part-time, quarter-time, full-time thing. You're either making consistent money or you're not. And if you want to at least have a shot, because trading and investing is hard enough as it is. And we know that. Those of you out there that have, got involved in this business know that this thing is not easy. By any means, okay? So just to kind of put everything in together, because I want to wrap it up, I hope you guys got something out of today. I'll always close with this, okay? Obviously, I'm Mr. Green. I am one of the main instructors at TradePhantoms. If you'd love to attend one of our workshops, we would love to have you. We always start students off with a complimentary workshop. Basically, just go to TradePhantoms.com. All right, click on register here. When you click on register here, it's just going to come up with a quick little box. It's going to tell you to click on this. I think right now the next one we got coming up is this upcoming Thursday with the awesome Mr. Black, who's going to be teaching it. Just click on register here, register for free. Go in, name, email, phone number, etc. We'll send you out a quick link. It's next Thursday at 7 p.m. Eastern Standard Time. There's a whole list of stuff that we're going over right underneath this. I'll just briefly hit it. Basically, we're going to talk a lot about short selling, all right? How to make money when it goes down or up, all right? How to look at different areas of the market, not just stocks, other things as far as, you can look at options, futures, Forex, cryptocurrencies, talking about how the markets really work and how they don't really work, how to start with a smaller account, how to use proper risk management. It's a ton of information. Trading and investing, I don't say this by any means to be negative, I'm just trying to be realistic with you, all right, is a complex business. So if it's something that you are, started to stick your head in and start to venture into and starting to realize, that it's not easy, Okay. Come see us. We would love to have you. Of course, after that, we have, membership programs. All that information's on the website. I'm a big fan of saying those start off with the complimentary class. One, make sure that this type of business is for you. Two, make sure that we're the right, educational facility for you. All right. We're strictly education. There's not a financial planning industry. We also want to make sure that you're a good fit. And if that works out, awesome. If it doesn't, you're going to learn a ton in the class anyways. Hope you all had a great day. Enjoy your weekend. Mr. Green is checking out. Peace, y'all.